All right, welcome to today's live session. Thank you so much for joining. If you're on YouTube, please like and subscribe. You can post questions in the comments on YouTube, and we'll go through those sequentially. I think you may be able to do that on other platforms as well, but we'll take all the comments and go ahead and start posting them. We'll go through them at the end. It's another great session today, focused on the December 31st deadline. We're going to focus on the setup deadline, the contribution deadline. So the concepts apply generally, but we're also going to zero in as well to give information that's specific to businesses that are taxed as a partnership, right? It could be a unincorporated partnership, or it could be an LLC taxed as a partnership. As always, we host our daily Zoom calls at our community, mysolo401k.net/my community. It's always free to join. All are welcome. We also have forums on there where you can post questions 24/7. We have a library of videos and webinars as well. So there's a lot of great ways to learn and to share the knowledge. The presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. We'll want to start out with some basic concepts before we dig into the contribution deadline, the setup deadline, as well as the contribution deadline. So starting out with the basics would be solo 401k eligibility. In order to be eligible to set up a plan, you need to be self-employed. So you have to have your own business with no employees working for you, specifically no non-owner, non-spouse employees. So self-employed individuals could be a realtor, an independent contractor, a solo practicing professional, like a medical professional or a legal professional. The key is that you don't have any non-owner, non-spouse, full-time W-2 employees. So you could have contractors, you could have part-time employees and still be eligible to set up a plan. Your spouse may also participate as long as your spouse is working in the business and reporting your own or the spouse's own earned self-employment income. In terms of some of the top eligibility considerations, you do not need to have a formal legal entity. We have many individuals who operate via sole proprietorship. The key is that you're reporting earned self-employment income in your taxes. So that would be on Schedule C, for example, for a business that is taxed as a sole proprietorship. W-2 wages, for example, for a business that is taxed as an S Corp. There's no minimum amount of earned self-employment income that you need to report in order to be eligible to set up a plan. But of course, if you don't report a relatively high amount of self-employment income, you're not going to be able to contribute a relatively high amount to the solo 401k, because your ability to contribute is a function of your earned self-employment income. You can't save more than you earn. Your spouse or business partner may participate in the plan as long as your spouse or business partner is reporting their own earned self-employment income. You could have a solo 401k even if you have a W-2 job, even if you participate in your W-2 employer-sponsored plan, your day job plan, as long as you've got that separate earned self-employment income to justify setting up the solo 401k. Now let's also continue to lay the foundation with some common use cases. And we'll do that by going through different customer profiles. So number one would be the frugal investor. So setting up our plan will make the self-employed business or individual eligible to start claiming $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years, which is going to more than cover the cost to set up and maintain the plan for the first 7 years. Another common use case or customer profile would be the Roth maximizer. So with our plan, you can contribute as a Roth and or Mega Backdoor Roth contribution up to $69,000 or even $76,500 if you're 50 or older for 2024, as long as you've got that self-employment income to justify those contributions. Another way that our clients are getting money into their Roth account is by processing an in-plan Roth conversion, by moving money that's already in their pre-tax solo 401k account. It could be money that they roll over from another retirement account like a former employer plan or a non-Roth IRA into their pre-tax solo 401k sub account, and then converting it from the pre-tax status to a Roth status. Of course, that's going to be taxable for the year of the conversion, as well as reportable, but we do handle that 1099-R reporting that's required as an optional free service for our customers. Another common use case would be the large account holder. Once the value of the plan exceeds $250,000, there's an informational filing requirement. The name of that informational filing that needs to be filed, or that's required to be filed, is the Form 5500EZ. So we handle that Form 5500EZ for our customers as an optional free service. In other words, no additional charge. We also do it under the electronic filing system, the EFAS system, to make it easy for all parties. The alternative investor would also be attracted to our plan because not only can you invest in traditional brokerage type investments, such as stocks, bonds, mutual funds, and we help our customers open up accounts at the bank or brokerage of choice, including free accounts at Fidelity or Schwab, just to name a couple places. But in addition, our plan allows for true alternative investments, such as real estate, private placement, private stock, crypto, notes, precious metals, etc. Lastly, the rainy day investor. So with our plan, you can take a solo 401k participant loan. This would allow you to take money from the solo 401k and use it for any purpose whatsoever. It could be a personal purpose, an emergency, paying down credit card debt, etc. It's not going to be taxable nor subject to penalties as long as it's, number one, within the terms that are required for a solo 401k loan, as well as documented as a solo 401k loan. So we handle those loan documentation requirements as an optional free service for our customers. In other words, we prepare the loan documents within 1 business day when someone's ready to take a solo 401k loan. The terms that are required would be that the loan must be paid back in monthly or quarterly payments, equal payments of principal and interest. It's going to be either prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. And you can borrow, again, up to 50% of the balance, not to exceed $50,000. All right, so now let's dig into the solo 401k setup deadline, as well as the contribution deadline. So this chart here gives a good summary of both of those deadlines. So what's great is that for a self-employed person, you have more time to contribute to the plan as long as you sign up by a certain deadline. So to maximize all the different types of contributions that you could contribute and to maximize the time that you have to make those contributions by, you want to sign up by the end of the year. Because if you sign up by the end of the year, you'll be able to make all types of contributions, whether it's employee, employer, or voluntary after tax, by the business tax return deadline, including any timely filed extension. So for a business that is taxed as a partnership, that's going to be March 17th of 2025 or September 15th if you file a timely extension. Now, for someone that doesn't set up the plan by the end of the year, they could still set up a plan in 2025 and make certain contributions, but they wouldn't necessarily be able to make all the contributions. So if they set up the plan after the end of the year, but by March 17th, they could still make employer or voluntary after-tax contributions by March 17th. If they file a timely extension for their partnership tax return, their 1065, then they could still make employer or voluntary after-tax contributions by September 15th. Again, if they file that timely extension. So how do you meet the deadline? Again, the best case is to sign up by the end of the year, because that'll preserve the ability to make all types of contributions by the business tax return deadline, including any timely filed extension. So what does it mean to sign up by the end of the year? Well, you just have to submit our online application. We prepare and make payment. Once you submit the online application and make payment, we prepare the documents within the same business day. We send you an email where you can download the documents from our secure portal. You just sign the documents and you've met the deadline. You don't even need to return them back to us, right? because that's what creates the plan. I think it's helpful to understand that a 401k is a legal entity. So like any legal entity, what creates it is the documents. So it's not necessarily opening up the accounts or making the contributions. So in order to meet that setup deadline of December 31st, you just have to sign up with us by the end of the year, because we draft the documents within the same day. And then you can take your time after the end of the year to open accounts, make contributions, and setting up and signing up by the end of the year is going to, again, preserve the ability to make all types of contributions until your business tax return deadline, including any timely filed extension next year, whether it's pre-tax or Roth employee, pre-tax or Roth employer, and or voluntary after tax, which is how one makes Mega Backdoor Roth contributions. So again, you can take your time to open up the accounts, make the contributions next year. So to further break down the steps, we have a quick 1-minute application. Just 10 simple questions to gather the information that's needed to prepare the documents. Once you submit that information, make payment, we again prepare those documents within the same day. We send out an email where you can access those documents in our secure portal. You just download and sign the documents, and you've met the deadline. You can sign the documents with electronic signature if you have that type of software. So of course you can sign it with the wedding signature, and then you can take your time, right, to return the documents back to us, because now you've met the deadline. You've got plenty of time until next year to open the accounts, to make the contributions. And we're very hands-on in helping customers open up accounts at the bank or brokerage of choice, right? So you just return the documents back to us. Again, there's going to be a secure upload page or a secure upload link in the same email. We then take you to a page on our website where you let us know where you want to have the accounts at. So we're totally neutral as far as where those accounts are at. We've helped customers open up accounts at hundreds of different banks, many different brokerages. So for example, if you want to have the accounts at Fidelity or Schwab, we would pre-fill the paperwork that Fidelity or Schwab would require to open up the requisite number of accounts. And then those are going to be free accounts at the brokerage. In other words, Fidelity and Schwab doesn't charge anything to open up those accounts. They have free online trading. It comes with a free checkbook. And then, of course, bank accounts is another great option. That's an option a lot of times for folks that are looking to invest in alternative investments. They like to have a bank account. So then you can fund the account. Again, if you sign up by the end of the year, you're going to have the ability to fund all the way up until that partnership tax return deadline. So either March 17th or September 15th if you file a timely extension. And that's clear based on IRS Publication 560. IRS Publication 560 is the landmark guidance for self-employed retirement plans. And so you'll see in a couple slides here, there's a chart on page 3 where they make clear that as long as you sign up and set up the plan by the end of the year, you preserve the ability to make all types of contributions until the business tax return deadline, including any timely filed extension. So in terms of some of the common use cases, do I have to obtain an employer identification, common FAQs, I should say, do I have to obtain an employer identification number by December 31st, 2024? No, you don't. All you need to do is set up the plan by the end of the year. The way that you set up the plan is by creating the documents, signing the documents. So ultimately, an EIN number will be needed for the 401k, and we obtain that as part of the onboarding process. But that doesn't need to be obtained by the end of the year to create the plan and to meet the deadline, to meet that establishment deadline. Do I have to open up the bank accounts or the brokerage accounts by the end of the year? No, you don't. All you need to do is set up the plan. What sets up the plan is creating the documents, sign the documents, which we do within the same business day when someone signs up with us. Do I have to make my employee and employer contributions by the end of the year? No, you don't. So all you need to do is sign up, set up the plan by the end of the year, and that'll preserve the ability to make those contributions. Here's the chart on page that's from page 3 of IRS Publication 560 that I was referencing, where you can see that it makes very clear that the deadline to set up the plan is by the end of the year, which means that the last day for contributions is the due date of the employer's returns. That's the partnership return, including extensions. And that's both for elective deferrals, which are employee contributions, as well as employer contributions. And this deadline makes sense, right? Because for a self-employed business, a self-employed individual, a lot of times they don't know exactly how much money they make until after the end of the year. So if I adopt the plan in December 2024, how can I make contributions based on income that I earned in January 2024? Well, the industry best practice is that the plan is going to be effective as of January 1 of 2024. So even if you adopt it in December. So that means that you're going to be able to make contributions based on all the income that is earned and reported, all the self-employment income that's earned and reported for 2024. My CPA tax advisor is informing me that the employee contribution must be made by December 31st. Are you sure that I can make this contribution in 2025? So we're most definitely sure, again, based on IRS publication 560. Moreover, it makes sense from a policy perspective. So a lot of CPAs and tax advisors are coming from the perspective of a full-time employer plan. So for example, a plan at a large corporation where the employees do need to make those contributions by the end of the year. But the deadline is different for self-employed persons. The rules are different. And again, it makes sense from a policy perspective because your ability to contribute to the plan is based on your earned self-employment income. You might have someone with a seasonal business where they don't know exactly how much they've earned till after the end of the year, right? So that therefore you have more time to determine how much you can contribute. In other words, based on your earned self-employment income, and then how much you want to contribute. So let's see, we've got a great slide here that goes through, all the different business types, because it is driven by the business type, whether it's a sole prop or, as we've been discussing, partnership or an S Corp or a C Corp. So there's a lot of great resources on our website. As mentioned, we have our community, mysolo401k.net/my community. We appreciate everyone taking the time to watch today's session. If there are any questions, we definitely have time. And we do, again, appreciate all the participation. Please like and subscribe if you're on YouTube, as we are hosting weekly webinars here on YouTube, in addition to the daily Zoom, the office hour style calls that we have throughout the week on the community. All right. Well, thank you so much, everyone. Until next time, take care.